Good morning, ladies and gentlemen. Welcome to the Q1 FY22 conference call of Nila Infrastructures Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touch-tone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to everyone. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Nila Infrastructures Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first quarter of financial year 2022. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audience are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings conference call and give it over to them for opening remarks. We have with us Mr. Deep Vadodria, Chief Operating Officer, Mr. Prashant Sarkhedi, Chief Financial Officer, and Mr. Himanshu Bhavishi, Group President. Now, without any further delay, I request Mr. Deep Vadodria to give his opening remarks. Thank you, and over to you, sir.
Good morning, friends. I welcome you all to the earnings call for the first quarter ended on June 30th, 2021. The global economy has since been recovering due to a series of stimulus packages driven by positive policy support and progressive vaccination leading to improvement in sentiment. Meanwhile, Indian markets were adversely impacted during the quarter 1 FY22 due to the second wave of COVID pandemic. It once again ceased our operations during the first 2 months of quarter 1 FY22, wherein the availability of labor and raw materials were constrained. However, our financial performance for Q1 FY22 is exceptionally strong as compared to Q1 FY21, mainly due to lower base effect. The EBITDA margin is almost back to normalcy, while the impact of rising spreads are expected to positively benefit in the coming quarters if there are no any further waves or aftershocks stemming from COVID-19 pandemic. The positive and encouraging result coupled with healthy order book and execution visibility indicates a reasonable potential for FY22. It gives us sufficient confidence to restore normalcy and resume the growth by timely execution of the projects, especially the PPP projects will drive the product mix enrichment and expansion of margin, strengthening our financials. We've since gained proprietary technical know-how by satisfactorily completing 4 slum rehabilitation and redevelopment projects at Ahmedabad, improving lives of more than 1,700 families. The company is keeping an active watch on the latest happenings and has been recalibrating its execution strategies by building greater differentiation, escalating sustainable growth, and increasing the shareholder value. Now, coming to our order book, on June 30th, 2021, the company has confirmed and practically executed an order book of 5,411 million rupees, in line with ethos of good corporate governance, ethical practices, fairness, and transparency. This is prudently reduced or realigned to depict the factual revenue potential. The book-to-bill ratio is not comparable at this point in time. The company's order book is quite balanced with a focus on its core competence of affordable housing with 88% of orders, which is 4,762.8 million rupees, while for de-risking 12% is from civic urban infrastructure projects, for example, Busport. High margin PPP projects is a major tributary with 69% of the orders, that's 3,706.3 million rupees. Geographically, the state of Gujarat accounts for 81% of the orders, which is 4,361.9 million rupees. And principal government entities account for 88% of the orders. The major government clients are comprising of Ahmedabad Municipal Corporation and Government of Rajasthan. Overall, the company is executing construction of 7,184 units of affordable housing. With this, I now invite Mr. Sarkhedi, our CFO, to discuss the key financial and operational highlights for the quarter under review.
Thank you, Mr. Rodadria, and good afternoon, friends. I quickly take you through the highlights for the quarter one, ended on the 30th June 21. In terms of the quarterly standalone performance, during the quarter one, FY22, the total revenue of the company was 231 million. That is higher by 140.5 million. Quarter one, FY21, 90.5 million rupees, while it was 384 million during the quarter four, FY21. Profitability at EBITDA level has also been restated to the large extent to 21.4 million, higher by 52.1 million to quarter one, FY21, rupees 30.7 million loss. The company reported the profitability of 2.4 million, higher by 38.9 million to quarter one, FY21, rupees 36.5 million loss. The profitability at EBITDA level increased mainly due to the lower base in the quarter one, FY21. The project and operation cost and the other cost increased, with a few projects being in the preliminary stage. The depreciation and amortization expenses increased due to the additional depreciation towards the fresh fixed assets. The company successfully renegotiated the rate of interest with the lenders for the existing as well as the fresh debt, and has marginally lowered the average rate of the interest, while higher utilization of fund-based limits has accordingly increased the finance cost. The overall increment in the income improved the profitability. None of the bank guarantees submitted by the company has ever been invoked by any of the principal or client. The company is enjoying the investment grade credit rating of BBB plus stable and A2 from the Brickwork rating. At the June 30th, 21, the standalone net worth of the company 1,441.7 million and standalone gross debt 1,424.5 million, while the cash and bank balances at standalone basis was 61.2 million. The net debt to net worth computes 0.95x. In terms of the quarterly consolidated performance, during the quarter one, FY22, the total consolidated revenue 169.2 million, higher by 81.4 million to quarter one, FY21, 87.8 million, while it was 386.4 million during the quarter four, FY21. Profitability at EBITDA level has also been restated to the last extent to 19 million, that is higher by 49.8 million to quarter one, FY21, 30.8 million loss. The profit reported was 6 million loss, that is higher by 34.4 million to quarter one, FY21, 40.4 million loss. I now open the floor for a question and answers that may require the further clarification. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Sanjot, an individual investor. Please go ahead.
Hello, hi. Good morning. I see that we have gotten out of many projects. Can you elaborate on which projects we gave up and why? Also, like if we could expect any more projects to be given up in the coming quarters?
So, hi, good morning. So we gave up on two projects. One is the Dholera SIR project, which we gave up on because there was change of design and they wanted to reevaluate the bid. So that was pulled in by the client. The same goes in for the Danapit fire station. where there was change of design and government has pulled back the bid. It actually works out well for us because these were EPC contracts and these were bidded long back. And with the price movement that we've seen in the raw materials, we were probably going to get a big beating on the orders if we had to actually execute them. So it was somewhere a blessing for us to retract from these orders. And this retractment actually came in from the government because of various reasons. One being the design change on the Dholera SIR, and the other one being their internal matter in terms of the fire station construction, where they also, I believe, wanted to change the design or maybe reevaluate the bid itself.
Right. So, but moving along, there's also an increase in our finance cost and other income on a quarter-on-quarter basis. Can you please explain why was this? And especially since the sales were down on a Q-on-Q basis, so why did that increase?
So as far as finance costs are concerned, we have a lot of projects which have been in the pipeline, where twice the pipeline has been stopped because of COVID wave. So as you understand, on the PPP projects and especially slum rehabilitation projects, there's a lot of groundwork that happens before we can actually start construction on the site, and which could take some of our capital. So since there are a lot of projects which are in pipeline, some of the capital is obviously gone there where the construction is not really started. That's why for higher utilization of the values, we've had the finance cost rising a little. On the other income, Mr. Prashant Sharkedi will throw some light.
Yeah, the things, our fixed cost basis remains same. While due to the first quarter, the 2 months of the initial quarter was not giving any of the top line to us. So the fixed expense remains same and revenue was not there. So that's why the cost is comparatively higher. In upcoming quarter, it would be remain same as per the previous norms.
Okay. There was a mention of, ground level work. So could you talk a bit more about that? Because have the operations normalized and are there any labor issues currently?
Currently, there are no labor issues. The labor is back to normal, we would say, and fingers crossed it's going to remain that way. Obviously, the uncertainty lurks around the entire country in terms of is there going to be any wave or is there going to be any spike in terms of wave 3. But currently, we cannot complain. In the current state, the availability of labor is pretty much in place, and it's back to normal. And as far as work on the ground, yes, the work on the ground has also begun. Actually, because of the COVID wave, we were not allowed to move these people out from their existing slums so that we can take possession. Now, on 2 or 3 of the projects, we are at an advanced stage of moving these people out, and we will be able to move them out, and those projects will start delivering on the revenues in terms of revenue realization in our book. So on the ground, definitely the situation has improved quite a lot from the call that we had.
Okay. Thank you so much.
Thank you. The next question is from the line of Tanvi Ketkar, an individual investor. Please go ahead.
Hi, good morning. Can you talk a bit more about your current order book mix? Where are there any new orders in this quarter, or do you plan to diversify this mix in the coming year? And also, could you talk about your expectations on where the order book will be by the end of the year?
Hi. So, yes, on the order book, no, actually, to be very honest, as a priority of most of the clients was to minimize the effect of COVID wave 2. I don't think there are any orders, but there's been a significant increase in one of the orders that we had, which obviously was notified to the exchanges. Was one of the AMC order for slum rehabilitation at Harivanna Chhapra was revised from where we had the premium payment to AMC towards free sale land is now reduced to 0, while the total residential units have increased to 2,198. So the unexecuted confirmed order book shall increase accordingly. This revision makes the company eligible to revise TDR, receive TDR worth 1,498 million rupees. Since intimated the stock exchanges, of course. As far as the product mix is concerned, well, to be honest, before the pandemic came in, we had started making the shift in terms of the order book, where we were moving our order book more towards orders which would bring us more profitability. And the pandemic actually has vindicated our stance because everyone in the sector, including us, have taken some bit of a beating in terms of the profitability of PC contracts, in terms of obviously the exponential rise in key raw materials, plus cost overruns because of COVID pandemic, because some of the costs are fixed, of course, even if the labor is not there, the staff cost is fixed. So now project overruns and stuff. So when you're working on the slim profitability margins, all of these hurt you really bad, which I believe is a scenario across the sector. So going forward, obviously, yes, we've been focusing on diverting our order book more towards the PPP. We're very happy with the mix right now that we've been able to achieve. I believe 88% of the orders are now in the unexecuted order are from PPP business, which are going to be higher profitability businesses. And going forward, in terms of the order book position, we are very comfortable at this point of time with the kind of order book that we have. As far as the guidance for the year, we've restrained ourselves from giving any guidances in terms of earnings or order books. But this range of order book is somewhere pretty comfortable with us, and we've been actively hunting for the opportunities that we've been targeting, and we will continue to bid for them.
Okay. Also, could you just give some rough guidance for the end of the year in terms of top line growth? And also, do you expect to close the year with a profit, since Q1 was also a loss?
So again, repeating what I said, we've been retracting from giving any guidances, but I can tell you by and large that yes, we will start back, build back from last year. Last year obviously was dismal because 2 of the quarters had gone by. The way it looks now, FY22 is going to be much better than that on revenues, as well as some bit of the profitability. Yes, I can tell you that the way it looks like right now, we are going to close FY22 with profitability, and with the product mix that we have, the profitability also looks in good shape. While we can look at FY23 to get back into the full rhythm that we were before the pandemic.
Okay, all right. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star and 1. The next question is on the line of Rita Agarwal, an investor. Please go ahead.
Hi, good morning. Thank you for giving me this opportunity. Can you please give some update on our logistic parks, and also any sales that are happening there? And what's the outlook for this business in future and our plans?
Hi. So yes, there's been some uptick of in terms of inquiries have actually opened up. That really, of course, dried up in the last quarter because of the wave 2 and because of the shutdowns again of the care of vehicles not being sold. Suzuki has really ramped up production. Unfortunately for them, the pent-up demand is pretty much there, but they've been stuck with a somewhat a wrong strategy where the models that have pent-up demand, the production's trailing, and that's why they have large waiting periods for the models where the demand is pretty much there. So the outlook definitely looks very positive. Just to give you an update, till now on one of the other big land parcels, we were not able to monetize that land because it was inside government SIR, and because of various reasons that were pertaining to the government, there was no real activity which was happening from the government's end on the SIR. But I'm happy to announce to people that on the SIR TP1, which is the Town Planning Scheme 1 on the SIR, they have started opening up the road, which makes most of our lands accessible over the period of next few months, and that obviously gives us the opportunity to unlock the value that we were looking for all of these years. So the potential definitely is there. Maruti is looking in full swing, and the production's really scaled up. Even the third unit has started, and their long-term plan still pretty much stays in place, and the future definitely looks good. However, it may be noted that there has been a lot of pullbacks in the last 1.5 years for various competitors that are there in the space in terms of logistic leasing. We are happy to announce that we've been able to protect and keep all of our tenants in place in this challenging period. We've worked with them, and they've also supported us in the entire space. And all of our existing tenants, none of them have gone away in the last 4 to 5 quarters.
Okay. Thanks a lot.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. A reminder to the participants on the conference, anyone wishing to ask a question may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Deep Vadodria from Nila Infrastructures Limited for his closing comments.
Thank you, friends, for joining us today. Going forward, we will continue on the growth path. We will look forward to having you with us on the next quarter's call. In the meanwhile, our team and our IR team will be more than happy to assist you. Thank you again. Have a good day.
Thank you. Ladies and gentlemen, on behalf of Nila Infrastructures Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.